Hi everyone, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on Sunday the 20th of September 2020. Now, I know the market is incredibly challenging at the moment, and before I switch over to my screen share and walk through a presentation of charts for you, I just want to let everybody know that I appreciate everybody that taking the time to email, message me, etc. after the last analysis. I know that it's enabled many of you to identify the defensive areas in the market and to understand that it's not a time for being aggressive. If you missed that analysis, or maybe this is the first time that you've come across my work, I think what I'll do is I'll link at the end of this video a couple of links for you, just so you can see what technical analysis on a professional level looks like, and hopefully you get some insight from this. I'm getting a lot, as I said, lots of emails and messages about technology in particular, what the hell's going on. I think something to bear in mind is that markets rotate. Now, technology has been incredible over the last few months, but like all good trends, they come to an end, and this is kind of what we're seeing. There are areas of the market that you can look to take advantage of, but I think it pays to understand that it's a global market. It pays to understand that it's not a basket of technology names. There are some incredible moves taking place in other areas of the market that I suspect many of you will be missing. So hopefully this gives you some insight into the areas that are moving and areas that you can maybe focus on if your time horizon is the intermediate time frame. Now, something to just get out there right off the bat is most of you already know that I'm not a day trader. I'm not in the stock market for little 50-cent moves. I'm in it for $20, $50, $200 moves, and that means staying in a trade for weeks and sometimes months if the trend is paying particularly well. So, like I said, hopefully that filters out a lot of you guys that are looking for get rich quick and are following all the day trading gurus on social media, which is a lot of nonsense, I have to say. But you know, let's see what you think of this, and if you enjoy it, give it a thumbs up. Appreciate it. Now, before watching any further, please do pause the video. Make sure you're comfortable with that. Basically says that I'm not an investment advisor. Do your own due diligence, and I assume no responsibility for any positions that you might take in the market. Again, most of you will know this already, but I'm registered with the CMT Association. I'm working my way towards my chartered status at the moment, and technical analysis is something that I'm widely known for. If you get some value from this, feel free to subscribe to our channel, give it a thumbs up, give it a like, let me know what stocks are on your radar, and if you need any feedback on a chart, again, feel free to comment below. I think the question that I'm being asked a lot at the moment is what's happening with technology? What areas of the market can we look at for the forthcoming week or two? Now, something that I just want to say, you know, right off the bat is the market is undergoing a bit of a rotation at the moment, and it's something that I've been on top of for the last few weeks. What we've seen is the rotation out of technology. Now, this is what's called a relative rotation graph. Up here we have the leading areas of the market. Down here we've got the weakening areas, we've got a lagging area, and we've got an improving area. Now, over the last couple of weeks, there's been a very definitive rotation out of technology. Now, that's just one of the many data points that we use in order to understand what is going on with the market, where should we be looking, where's the strength. Now, over the course of the last week, we've got biotech starting to move, we've got a move into gold. Small caps have been really good of late, and industrials have been incredible over the last week. Now, for disclosure, these are the list of positions that were provided to our client base last week and how the stocks have ultimately gone on to perform. I am going to be talking about some of these stocks today. Some of these stocks I have positions in, many of my clients have positions in these stocks, but I will be walking through some of these charts today as well. Now, getting on to technology, I think something that we all understand is, although we've had the rotation out of technology, I think everybody's wondering is, can we buy the dip? Can we buy these perceived discounts? Now, in my opinion at the moment, there's a lot going on with technology under the surface. We have a deterioration of breadth now. What this indicator here is, it just tells us the percentage of stocks that are trading above their 50 period simple moving average. Now, the reason why, certainly within my work over the last couple of weeks, we've certainly been defensive with technology, is we've had this deterioration of breadth during this market rally. Now, what the concerning thing for me here is, we're meeting a little bit of resistance here, and now we've crucially had a convincing close below the 50 period simple moving average. Now, if the market doesn't rally Monday, Tuesday, which is entirely possible, technology could absolutely rally. I think there's a potential for a little bit more of a decline. Now, that doesn't mean that the stocks within technology are bad stocks to own. It just means that, in my opinion, it's just a case of managing risk a little closer and just waiting for some kind of confirmation that we found some kind of level of support in technology to enable the purchase of some of these stocks that we all know and love. Now, the S&P 500 again has closed below the 50 period simple moving average. Now, that in of itself does not mean that the whole market declines. This is evident with the performance of some of the sectors over the course of the last week. And as we can see, biotechs ripped higher last week. We've had energy move, we've had mobile payments move higher, we've had semiconductors, industrials, home builders. The only real area that's really struggled, in my opinion, is technology. So I think when we understand that it's not a stock market of technology stocks, and you're able to kind of broaden your horizon and do some due diligence on some of these names that I suspect many of you just won't be aware of, the market starts to become a little bit more simple. Now, something else to just kind of point out, and this is something that within my work at the moment I'm keeping a very close eye on, and it's about understanding the relationship with the US dollar and the implications that it may have for other asset classes, stocks for example. Now, what my chart is basically saying here is, well, what happens here if we get a breakout here in the US dollar? Now, I don't want to confuse anybody or overcomplicate anything here, but what we have here is an upside down chart of the chart that I was just talking about. I've inverted the US dollar index and I'm comparing it with the S&P 500 ETF SPY here. Now, hopefully what this shows you is that they look almost identical when you invert the US dollar index. So the question I'm asking at the moment is, if the charts are correlated at the moment, what happens if the US dollar breaks higher? Well, if the correlation holds true and we have a situation where the US dollar is ripping higher, that would be an environment where the S&P 500 might have a bit of a decline. Now, we don't know for certain if that will definitely happen. The correlation can, I suppose, remove itself at any point. But these are the types of things that we need to be aware of. And I suspect many of you watching just won't, drill it down to the kind of level that we do within our work, because I'm assuming most of you just don't have the time to kind of do this and keep an eye on all of this. But we do have volatility dropping. And when we have volatility dropping and we've got areas of the market that we're looking for, we want to be identifying the strength in the market. Now, what that essentially looks like is, and this is an example of XLE energy versus technology, over the last 8 years. Now, would you rather be invested in an area of the market that's showing relative strength to the S&P 500 or relative weakness to the S&P 500? So, and this isn't a dig at anybody that owns energy stocks or anybody that's using dividends, etc. It's all valid. Energy could quite conceivably reverse and rip higher, but I don't like stress within my investing. I like to minimize the stress. So I'm looking for relative strength in the market. Now, when I talk about relative strength, this applies to the current environment as well. And what areas are showing relative strength to the overall market? Well, this is just one chart for industrials, XLI. This is a very, very useful tool. If we can see that the industrials are breaking out relative to the S&P 500, we want to be looking for the best industrial stocks. Likewise, if solar energy is breaking out, we want to be identifying the strength within these areas of the market. Now, that leads me on to the individual names that I'm about to walk through. There are, I think, 20 individual stocks, the charts that I think are looking like they might break out to the upside and start to show this relative strength that we're looking for. Now, that's not to say that the approach that you have, that buying dips, etc., doesn't work. All styles are valid. The work that I provide is about identifying the strength in the market, identifying the areas that we think are going to start to outperform. Now, individual names, I think VSLR, solar company, it does look like we are potentially breaking out here. Again, it's part of the solar space that I just highlighted a second ago. It's obviously on a massive tear, rip higher at the moment. So hopefully the performance continues. The one thing I don't like to do is put a cap on how far price can go. Many of you will be looking at this and saying to yourself, well, I don't want to buy stocks that are at 52-week highs. I would counter that and say this could quite conceivably keep ripping higher for the next 12 months. All stocks, by nature, at some point will trend in some capacity, and how far that trend goes really just comes down to simple and effective trade and risk management tools that, again, technical analysis helps us with. Now, this is one of my favorite charts at the moment. We have CLDX. I think if we have a breakout above $14 here, I think this is looking like a beautiful setup. I'm sure it's probably on the radar for most, but CLDX is looking like it's wanting to move. I think we've got Snapchat, again, uptrend, consolidating. I like Snapchat above $27. We do have a little bit of support there from its anchored VWAP. So that'll be interesting to see if this is the spur for the next move higher there. We've got Fate Therapeutics. Again, Therapeutics have been absolutely massive over the last few months. I like Fate Therapeutics above $40. It does look like we've had a breakout here. I'd like to see some kind of continuation. I am very, very aware of where the stock has come from, so it wouldn't surprise me to see it move sideways for a few days before hopefully taking the next leg higher. We've got Restoration Hardware. Again, I think we've broken out above a key, and as we can see here, significant Fibonacci level. So I think above 370, I think provided it stays above this Fibonacci level, I think there's a very logical target there of 581. Now, I'm not saying that Restoration Hardware is definitely going to go to 581. We don't know if it will get there. But what technical analysis does, it helps us to identify these targets where we might encounter some resistance in future. But I'm very much aware that we do need to overcome things like earnings season and earnings reports, etc., news events. But something that I firmly believe is that price takes into account all available information, and price doesn't lie to me. So certainly I think RH, in my world, hopefully we see it move towards 581. Peloton looks really, really interesting. It has found support at the 20 period simple moving average. I do expect Peloton to go and test $100. We've had a breakout in Nuance Communications. I think certainly this is a long-standing breakout dating back to 2012. That is not a bearish move for the stock. Technology name that has held up very, very well despite the recent declines. It's showing really good relative strength to the market. So again, if Nuance Communications isn't on your watch list, it might be worth doing some due diligence there. NVTA, this was a stock that was massive for many of our clients a few months ago. And again, I think it's been consolidating, and I think this is an appropriate level here, above $41. I think we're potentially looking at a breakout. Now, just to go back to, one of the names that I get asked about routinely, the Netflix, the Apples, the Amazons, etc. Something that I do like to keep an eye on is when we are consolidating in a range, which is what Netflix is currently doing at the moment. I'm looking for things like this where we get rejections at key support and resistance levels. Now, the 50 period simple moving average is simply just an average of price, but when we get these rejections, that tells me that it's not a time to be aggressively buying the stock. Now, absolutely, Netflix could hold firm here, bounce and rally higher, but I would be very, very conscious if we were to get a breakdown here. For me, if it was to break down here, I would see it coming down and probably testing the 200 period simple moving average, which is currently around 413. So I think at the moment, big tech is having a lot of question marks asked of it. So I'd be very, very aware of that. Apple, on the other hand, again, I've added in an anchored VWAP here, and what I'm doing here is building in support levels. Now, when I build in support levels for stocks that are declining, all I'm simply looking for is to see some sort of definitive bounce followed by some sort of continuation. Now, that doesn't mean that the bottom is definitely in, but what it will do when we get some sort of signal followed by continuation, it just gives us a little bit more peace of mind that there are buyers there ready to step in, and quite often it offers a very good risk to reward proposition, and that's something that we're very, very big on with our work at honeystocks.com, is identifying the strength, identifying really good risk to reward propositions, and managing risk. Managing risk is absolutely the most important thing, protecting your capital. And if we can do that, when we build in these support levels, price will inevitably bounce from somewhere when we have these blue chip stocks. So again, I think Apple, it's worth doing a bit of due diligence on the chart. Amazon, again, I think if it breaks below $2,900 here, I think that's a problem. Again, it's showing relative weakness to the overall market at the moment. Like a lot of the juggernauts, as I like to call them. But again, this level at 2,900, we can see from past history, these Fibonacci levels are very, very significant, and I think $2,900 is a level of interest for me with Amazon. And again, Microsoft, again, not overcomplicating it, building in some key support levels and just waiting to see where price bounces from, and just identifying a buy point that we think is offering a good risk to reward proposition. It did close above $200 for the week. So again, the round number concept, these significant round numbers quite often offer support and resistance also. So again, something I'm very, very aware of with Microsoft. AMD, I was asked about a lot this week. I know, great company. It's showing a little bit of weakness at the moment. Again, like a lot of technology names, a close below the 50 period simple moving average is a problem for me in my process. But again, if we get a rally here, we know with failed moves to the downside, we can oftentimes get fast moves going the opposite direction. So if this is a potential failed breakdown, again, if it rallies and starts to rip higher from the 50 period simple moving average, again, that might be a stock that you might want to consider. CrowdStrike showing really good relative strength to the overall market. Technical analysis can sometimes be as simple as this. We don't need to overcomplicate it. We've got a trend line. We can see the trend line has some kind of merit. So again, provided CrowdStrike remains above this trend line, there is a trend higher. So I think CrowdStrike is showing really good relative strength to the overall market at the moment. Beyond the Meat, I was asked about a lot again over the last couple of weeks. I do like it a lot above 167. There was a little mini breakout early last week, and a couple of our members taking advantage of this. But again, we're looking for longer term structural uptrends. We want to be in trades for weeks to months because we have an intermediate time horizon. So if you're being a little bit more conservative, above 167, and I think then if we get above 167, I think it goes to 240. My thesis hasn't changed with Nvidia. I do believe ultimately it does head towards 620. I know that we kind of got up there. We're up at towards 580, 590, and it's fallen away like a lot of technology. But again, it's one of those that when we actually look to past history with price, again, it is showing really good relative strength to the overall market. This is the monthly time frame for Nvidia. Ultimately, I do see it moving towards 620. Docusign was another one that I was asked about this week. I think there's a bit of a support level here with Docusign. So again, I'm watching this with a lot of interest. We've got momentum. RSI is in a bullish regime. So this is something that I keep an eye on a lot. And if we break lower, that's probably a problem. But if we continue to hold firm here, hopefully the trend with Docusign continues higher. Square Inc looks like it's holding firm at the 50 period simple moving average. I've built in a bit of a triangle consolidation pattern, so I think if it breaks out higher above this trend line, I think we're looking at another breakout, and I would fully expect it to go and test 173, and hopefully if it can get through 173, next level of interest for me, aside from the $200 round number, would be 260. Trade Desk, again, we're not overcomplicating it. We've had an uptrend, we're consolidating, and again, for those of you that maybe like swing trading, again, provided we have a risk to reward proposition, and provided the percentage is worth it, trading between these ranges isn't a bad way to kind of do things sometimes. But if that's not your thing, then certainly a close above $500, I think a breakout here, and we'd probably see trade desks start to rip higher. Very, very similar setup with Pinduoduo. Again, just to highlight what I was saying a second ago, when we have a range, this case is 28%, we can quite often just trade it between the ranges, and that's certainly how I approach the more swing style trading. But again, for those of you that are looking for confirmation, again, a breakout would be above $100. Again, going back to that round number concept, the $100 is a problem for Pinduoduo, but if we can break out above that, again, you'd expect it to start to climb. STNE, again, similar setup, not overcomplicating it. We've got an uptrend, we're consolidating, which is quite oftentimes just a continuation pattern, and we like it above $56. We've got Dow Inc, which has been a massive performer this year. Again, we're conscious of these round number levels, $50. It's showing, decent relative strength at the moment, and provided this $50 level holds, we would have an expectation that Dow Inc continues and resumes its prior uptrend. And we are going to finish it off with GDX. Again, if gold miners aren't on the radar, I would highly recommend doing some due diligence. Uptrend, consolidating, continuation pattern. Hopefully it then starts to kind of move higher. So there's a lot of names within GDX, within GDXJ, that look very, very appealing at the moment. But like everything, you'll need to go and do your own due diligence and figure out what ones meet your requirements, your own rule set, because that's very, very important. You need to be able to, as an investor, follow your own process. It's not about following, let's say my process, or some trading guru, some day trading guru's process. Anybody that gives you a trading plan and tells you to follow their trading plan and their rule set, you should run a mile. You need to build your own process, because everybody's individual, everybody has their own personalities, etc. And it's about identifying and building your own plan. Now, that is essentially a look at what my work is and what I provide our clients and members every single week. Within our work, we also provide things like trade ideas. This is an alert that went out for Nvidia recently above 440. We had NV, TA, again, very, very clear parameters. We provide ideas, actionable charts. We provide weekend analysis. You can go and have a look at our website. But this is charting, charting support, whatever you want to call it. Zscaler is ripped way above this. This is one of the charts that was provided as a request. But something very, very unique about what I do with my work is I log every single official trade alert that I put out to our clients and members. I don't know anybody else that does this. I think it's very, very important. Now, something to say is, I'm not saying to anybody that, come and follow my work and, subscribe to our membership and you'll make 800% or 600%. It doesn't work like that, because you'll never be able to buy every single position that we're putting out there. But hopefully what that log will do is demonstrate that I have an ability to identify trends within the market. Like I said at the start, I'm going to link a couple of videos at the end of this so that you can get a better idea of what market reading looks like, how to get defensive, the analysis that was provided before the market crash, the analysis that was provided a few weeks ago before the tech correction. I think it's very, very important that anybody that is, potentially thinking about subscribing to my work understands exactly what it is that I do. It's not a trade alert service. I'm not a day trading guru. I don't do any of that. There's a lot of work, a lot of charting, and it's about identifying the intermarket relationships and identifying the strength within the market. So feel free to go and check that out. But the feedback that I've had from our current members, we've got close to 200 members now. If you're looking to get away from day trading, maybe you want to learn technical analysis, within our membership we give away completely free access to technical analysis tutorials that will hopefully help you build your own structure. As I said at the start, we provide charts. I filter through thousands of stocks every single week. We provide clean charting, and we've got a community that goes along with it. So again, feel free to go and check out our website. Everything is on there for you. You are able to go ahead now and process and purchase everything on our website. There is no requirement anymore to register and have back and forth emails. I've embraced automation, and it's made life a lot easier and a lot simpler for me. So if you've stuck around to the very, very end, thank you very much for watching, and maybe we'll pick up with you soon. Thanks again.